We have a bunch of breaking news to get into here in this video that you urgently need to know as an investor in our markets, and let me tell you, it doesn't exactly sound all too great. On top of that, we have big economic data coming out tomorrow morning. That is going to be your retail sales data. About 70% of US GDP is comprised of personal consumption and personal spending, so this data will be very, very important. We have all of that and much more for you, including some news out of Tesla here tonight that I think you also need to know. Hit the like button if you own Tesla stock, if you want to own Tesla stock, or you're looking to buy some more shares, hopefully a little bit cheaper. That's what I'm at least crossing my fingers for. As well as subscribe to the channel if you guys want to stay up to date with everything going on in the markets and Tesla each and every single day. As I have said many times, I sound like a broken record. This Israel conflict, if it does spread to be something much larger, could end up giving the markets 20, 30, 40% downside from current levels. And there's a lot of bad news in regards to this conflict here tonight. What's probably most alarming is approximately 2,000 US troops are placed on, quote, prepared to deploy orders to the Middle East. The US service members will likely deploy to neighboring countries in support of Israel, again, waiting for an order. These are combat-ready troops. They are Marines, but they are said to have a medical role and an evacuation role if need be. What is really alarming here is that would be boots on the ground potentially in Israel. That would be a much larger conflict at that point. And it's very easy to go from a medical role, a logistics role, to a couple people get injured or even worse, and now you're in a full-fledged war. This is a very slippery slope that it looks like we're about to slide down. Blinken holds nearly an 8-hour meeting with Israel's Netanyahu. Following that meeting, we are hearing news that US President Biden plans to visit Israel on Wednesday. They will apparently be giving him a comprehensive brief of Israeli war goals and strategies, while also hearing how they plan to reduce the possibility of civilian casualties during ground and air operations. This in and of itself is quite a shocker, because normally these trips take months in advance to plan when it's not in a war zone. So on such short notice, there's a lot of measures being taken here, I would imagine. According to the Iranian foreign minister, there could be, quote, preemptive measures taken by the axis of resistance against Israel in the coming hours. The axis of resistance includes Iran, Syria, and Hezbollah, as well as any anti-Western or anti-Israeli militia group across the Middle East, which are now under their control. According to the Iranian foreign minister, there could be, quote, preemptive measures taken by the axis of resistance against Israel in the coming hours. The axis of resistance includes Iran, Syria, and Hezbollah, as well as any anti-Western or anti-Israeli militia groups across the Middle East, which are under their control. Any preemptive measures taken by any of these countries or groups is definitely going to spark a much larger conflict, so we want to be watching for that. At the time of recording this video, it is 4:13 a.m. in the morning over there in Israel. It is dark out. Usually operations do not start in the dark time. You want to watch to see what happens tomorrow morning if we do actually have follow through from this threat? Probably not, but there's always that off chance that there is, and maybe this 2,000 troops or so is going there for a reason. On one hand, I think it's very unlikely that if someone knew something, Biden would be visiting on Wednesday. That just wouldn't be very logical to enter an active war zone at that point. If we did get Hezbollah or Iran or Syria sending strikes, missiles, fighters, any of that, shebang, probably wouldn't see Biden visiting the area. But who knows? Preemptive is preemptive. It's something we cannot always account for. The Speaker of the Iranian parliament has stated that if a ground invasion of Gaza occurs, that Iran will, quote, open up the gates of hell against Israel. So yeah, it looks like this conflict might be about to get a lot worse. Seems like every update I give you, it just gets worse and worse. Tomorrow, as I previously stated, we're going to have some pretty big economic data. Now, tonight we're going to get the unemployment rate out of the UK. That comes out at 2 o'clock in the morning Eastern Standard Time. You're expecting 4.3%. I don't think this is going to cause a big reaction unless it were to be so bad that everyone thinks, you know, the whole entirety of Europe is in a recession or going into one, which I'm not willing to draw that red line from one unemployment report from the UK. So there's a possibility of that, but probably will be a nothing burger. At 5 o'clock in the morning, Eastern Standard Time, you're going to get economic sentiment index from Germany. Germany is the largest country as far as market cap and GDP. Over in Europe, you're expecting negative 9.3. This would actually be a little bit better than what you've seen last month of negative 11.4. Germany is already in a technical recession, kind of like how we were during the first 2 quarters of 2022. So we'll have to wait and see ultimately how that one does come out. Probably not going to give you the biggest market move, but hey, we've seen crazier things happen. At 8:30 in the morning, you're going to get the inflation rate year over year coming out of Canada. This one could be a little bit more important, expecting around 4%. If it does come in at, you know, higher than that, you know, that would be a problem. But you've kind of seen inflation beat to the downside just across the board. Recently, the last inflation report from the US, that was last week, came in hotter than expectations, but the markets didn't really care all too much. But retail sales, let me tell you right now, people will care about retail sales. Like I said previously, about 70% of the United States GDP comes from the consumer and consumption. So retail sales, that is a direct measure of exactly that, consumption and retail sales. So if you see this retail sales number come in really low, like negative on a month over month basis, markets are going to be a little bit jittery if that is the case. You're expecting 0.3%. Last month's reading was 0.6%. So we'll see what happens. Probably going to come in a little bit better than expectations if I were to imagine. It seems like recently the numbers don't make any sense at all. So if I expect a fall here, it's probably going to come in higher. That's just kind of my logic these days. Think exactly the opposite of what you would expect to happen. I personally think retail sales might actually come in negative, but because I think they'll probably be better than expectations. And I know you guys understand that full well. If you guys take a look at some of these other secondary data points, you're going to get a lot of them. Retail sales excluding autos, retail sales excluding gas and autos, retail sales year over year, Red Book year over year, industrial production month over month and year over year, capacity utilization, manufacturing production month over month and year over year, business inventories, all kinds of secondary data. This usually doesn't have the biggest effect on the markets, but it's still something you definitely want to be watching. And then at 9:20 a.m. tomorrow, Fed Bowman will be speaking. Fed Harkin speaks at 10:45 a.m. tomorrow. And that's basically it as far as the regular trading day. You do have ECB Guindos that does speak at 1 p.m. They don't always move the market. Sometimes those ECB comments can have an effect. We'll ultimately see. I think it could be important to listen to some of these Fed speakers because this is really the first round of Fed speakers that you have heard since this Israel conflict has broke out. We want to see, do they change their tone a little bit? Are they a little bit more kind of dovish on rate hikes? Meaning, do they not expect to raise rates again? Do they feel a little bit more confident about their policy ahead? Or do they just keep the same narrative? Any narrative change is what the markets are going to pick up on, and that's probably what is going to dictate trading coming tomorrow, as long as retail sales don't come in as an utter disappointment or come in, super high. And then tomorrow night at 10 o'clock at night, PM, 10 o'clock PM, Eastern Standard Time, you're going to get industrial production year-over-year, retail sales year-over-year, GDP growth rate, unemployment rate, industrial capacity utilization, and a bunch of other smaller data points. Chinese data will be important. China is the second largest economy in the world. If they have really good data or really bad data, it definitely 100% will affect our markets. Now, in a little bit more Tesla-related news, this article came out from Reuters that says automakers blast U.S. plan to hike fuel efficiency rules. This says a group representing General Motors, Toyota, Volkswagen, and nearly all other major automakers on Monday sharply criticized the Biden administration's proposal to drastically hike fuel efficiency requirements. The Alliance for Automotive Innovation said the National Highway Traffic Safety Administration's corporate average fuel economy proposal was unreasonable and requested significant revisions. The NHTSA in July proposed boosting requirements by 2% per year for passenger cars and 4% per year for pickup trucks and SUVs from 2027 through 2032, resulting in a fleet-wide average fuel efficiency of 58 miles per gallon. Holy moly! Talk about fuel efficient. We also have this article that says expectations quite low for Tesla's third quarter with all eyes on upcoming Cybertruck. Wall Street expects Tesla's EPS to drop 30% to 73 cents, the lowest in 2 years for Chief Executive Elon Musk, but with revenue increasing 13% to $24.32 billion, analysts are also expecting Tesla profit margins to remain below its self-described floor amid fears there will be more surprise price cuts in the final months of 2023. However, Tesla bulls appear to already be betting on a fourth quarter rebound in deliveries with the revamped Model 3 in China and expected Cybertruck delivery launch. On Thursday, Morgan Stanley analyst Adam Jonas wrote, quote, expectations seem quite low on this quarter, Jonas said in the research note, that it is tough to find an investor who doesn't expect negative revisions out of the quarter. The Morgan Stanley analyst added that the focus will be less on Q3 and more on 2024 volumes and Cybertruck execution. Meanwhile, Wedbush analyst Dan Ives, a longtime Tesla bull, wrote Monday, Wall Street will be a laser focus on the margin performance and overall outlook for Q4. Ives added he predicts the Cybertruck will start rolling out to customers around November and December. Ives previously expected a Halloween timeframe for the Cybertruck. Quote, while the macro is clearly not roses and rainbows, we believe Tesla's demand story has stabilized at current price levels with a focus on a strong Q4 ahead. Cybertruck and other growth initiatives are on the horizon, but still, we wouldn't be surprised if Tesla trades sideways at best in the coming months. Potter wrote, this is the Piper Sandler price target decrease that we've seen today. They had a price target of $300. They cut that to $290. Big deal there, but still, that's kind of what you want to see before earnings. You want to see expectations get lowered before earnings. Then you can get that upside beat, especially if you can get lower expectations on a stock, meaning price cuts, price target reductions, and the stock's still green on that given day. Today, Tesla stock was up 1.12%. Sure, would it have been maybe a little bit stronger of a green day if we did not see this price target downgrade, decrease, whatever wordage you want to call it, doesn't matter, from Piper Sandler? Sure, it probably would have been up a lot more, but it makes the bar a little bit harder to beat coming on earnings. I think right now, Tesla is very strong. And you're probably going to get a big upside move if I were to imagine. I think the real story here for Tesla earnings is, as I said in the last video, if we get production estimates, delivery estimates coming out of Tesla for the Cybertruck in 2024, that is what could move Tesla's stock big time. I believe Wall Street is currently only expecting around 50,000 deliveries in 2024 of the Cybertruck, and then ramping up quite dramatically after that for 2025 and 2026. But if we get a number in which I think we could, in between 150, 250,000 projected deliveries for next year, that's probably going to send Tesla stock up 10, 15, 20% if I were to imagine. After all, usually if we're going to have a bad earnings, Wall Street and big money knows better ahead of time, and it's not uncommon to see a stock sell off into really bad earnings. Tesla stock is doing quite the opposite, continuing on its bullish trend. You are still even above your 50 and your 100-day moving averages by a couple dollars here, about $3 give or take, but Tesla's doing much better than your average stock in the S&P and the NASDAQ, where only about 25% of stocks are above their 50-day moving average. Tesla, from its 50-day moving average, is about $4 higher than its 50-day moving average, something you can't say about a lot of other stocks. And to my previous point, the number one most asked question is, how many Cybertruck deliveries do you anticipate for 2024? This is actually a retail investor that asked this question, and it is the most voted for question on the conference call out of looks like 1,300 questions that were asked. About 3.1 million Tesla shares are represented in this one question alone. The biggest potential risk for Tesla's earnings is if we just don't hear anything on the Cybertruck, in which I think there's probably only a 20% chance or so that we just don't get many details on the Cybertruck. That is a possibility. I think it is highly unlikely. I think there's about an 80% chance we get new details on the Cybertruck. You know, that would be production numbers, that could be a delivery date, expected delivery date, maybe nothing concrete, but at the bare minimum, I expect to get the delivery event that will be announced. And I think that is enough to send Tesla stock higher. Maybe not 10, 15, 20% higher, but surely 1 to 5% higher after earnings. I'm not expecting Tesla stock to crash and burn like we seen last earnings. And just a little bit more breaking news to wrap up this video. Quote, during the almost 8-hour meeting tonight with U.S. Secretary of State Anthony Blinken and the Israeli War Cabinet, it was stated that a condition for President Biden's visit to Israel was the approval for humanitarian aid into the Gaza Strip, which has now been okayed by Prime Minister Netanyahu. This is why the announcement for the visit took place right after the meeting had ended. So we'll see how this affects markets coming tomorrow. It does look like some of these headlines are starting to hit CNBC a little bit more, especially the one Biden will visit Israel on Wednesday. It looks like your futures are dropping a little bit. NASDAQ down about 0.05, S&P down 0.07, but nothing too big as of right now. And again, coming tomorrow, you really want to be watching these bond yields. So what you've seen on Friday was investors bought the bonds. It was a fear move, just 100% fear move. Investors bought gold, in which they have not done to that degree, causing gold to rally over 3% since the bottom of the Rona crash in 2020. This was almost 4 years ago now. So there's a lot of fear out there. Even though stocks were green today, I do not think that just means we're off to the races from here and we're out of the woods. Not by a long shot. And what we've seen recently is when bond yields are going higher, stocks have been going lower. Well, that did not happen today. 30-year and 10-year Treasury yields were up over 8 basis points apiece. I believe the 30-year was up about 9 basis points today, and stocks still went higher. So you really don't know how the markets are going to take any given, bond move or gold move on any given day. It's very strange. There's no rhyme or rhythm to what is happening right now. I think to some degree, algorithms are controlling part of the market. On some days, algorithms are in control. Other days, fearful investors are in control. So we'll have to wait and see what ultimately happens. This is a time to be defensive, have cash on the sideline, potentially be hedged out in your portfolios. If you would like to come hedge out your portfolio with us, or at the very least come get access to all of my trades that I make every single day live in real time, I send out all of my alerts. Link down below in the description of this video. Hit the like button and subscribe to the channel if you made it to the end of this video. You might as well. It's free 99. It costs you nothing to stay up to date with this information. Become a wiser investor and hopefully make more money. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.